Okay, welcome to How the Bankers Trade Forex. Now, this is the most important aspect, part two, capital management. Now, this is where I believe, most retail traders actually lose trading money. And it's primarily because they don't have a capital management system to guide their trade plan, their capital, their risk reward ratios, and the whole structure of the trading. Now, let me just come back to the bankers and the way they do it, and then I'll give you a quick slideshow through our capital management system and show you how it works. Now, with the bankers themselves, they're given sort of weekly, mainly more primarily monthly limits. Okay, they're given a budget, so they have to make $1 million. So the bank doesn't necessarily want you to risk $1 million to make $1 million, right? It doesn't really make sense. So if you had $1 million budget, right, over the course of the year, they might allow you, this would be for the junior traders, they might allow you like 300K drawdown over the course of that year. And what they'll do is they'll break it down over the 12-month period. So you simply get onto your calculator, 300 divided by 12, then you've got, or by 52, you've got your weekly drawdown, which as a chief dealer and me managing the team, I like to have a weekly drawdown on the guys, because if they have a brain explosion and then they follow it up with some erratic trading around volatile markets, you can lose your monthly or a couple of months of budget very quickly. So you want to have those limits. And as a chief dealer, they would come over and say to you, okay, listen, I'm down like 50 grand, right? That's my limit. I need to tell you that. Then I can make a judgment call whether it was a situation where it was a mistake or they just got caught out on a certain release or whatever it was, and then tell them to keep going or not, right? Now, so as I said, the traders have a budget they're looking for, and they're trying to make the big bonuses at the end of the year. So what they do is, say they've got a $100,000 drawdown for the month, right? And you can put that into, say, 4 weeks, and you've got like a 25K drawdown each week. Now, as I said, this is more for probably junior traders as it come out of a graduate junior role. Your budget would be like £1 million or $1 million US or $1 million Aussie, wherever you are. Senior guys, you're looking at least $5 million, right? And with that, you'll have probably a couple $1 million exposure to play with. So your limits are different. Now, let me just come back to that, say, junior trader level, right? $100,000 over the course of a month, 25 grand, say, a week, right? So what they'll do is they'll look at the weekly schedule, okay, and they will start to allocate. So there's like 3 really cracking opportunities that they think they could maximize the opportunity, right? So they might go through that 25K and go, you know what, this one is actually particularly higher. I'm going to put half my capital into that opportunity if it arises. And then the others, I'll just trim my trade size. So what they're doing is they're dynamically managing their capital via their limits. Because as I said, if you had listened to last week's webinar, you'll understand that the bankers themselves aren't given a capital management system. They're just given limits and then go mad, right? So that's why a lot of guys don't make it over the first couple of years, because they can't work out in their head how to manage the capital. They're breaching limits. As I said, if you breach limits, you're automatically sacked. Right, so it is a very important structure. But at the end of the day, you take out the risk, you take out the profits. And the managers know that, so do the traders. So they will try and maximize their limits around the best trading opportunities, and that's how they make massive gains very quickly. Now, like most traders, if the market doesn't give them anything, they won't look to utilize their full limits. They will go inside their limits and trade smaller lot sizes until they see a cracking opportunity where the fundamentals match up with the technicals, and that's when they will start to utilize their full limits. All right, so that's the way the bankers do it. It's very methodical. It's very structured as a manager. It's very structured as a trader. You put those two together, it's a very stringent, very disciplined system that ensures the safety of the team, longevity of the trader, and hopefully gives them every opportunity to make those big bonuses, right? And that's where I want to bring it back to you guys. And going back into when I set up Trades for Traders in 2009, I was trying to think of the easiest way to adapt that capital management limit system that we have in the banks to a retail trader or investor, okay? Give you some structure. Now, as I said, you having limits at home, you'll break them and just keep going. But if you can get disciplined around a capital management system or structure that has a defined drawdown process and draw-up process, it gives you absolute structure. Now, the easiest way for me to explain this to you is to take you through our capital management system. Okay, and I'll run some slides here, then I'll come back, have a quick chat at the end, and hopefully answer a few questions, and then you'll understand how important this is. And for those traders that are joining us who are part of Traders for Traders, you would already understand how important the capital management system is. Once you see it and you embrace it, you know you're going to be trading for a long time. I was going to say have a huge amount of longevity, but this is where your trading, everything stems from. And as I said, if you don't have this capital management system, and not just our system, but a system which controls every aspect of your entry, exits, your risk reward ratios, your capital itself, then you don't have a structure, right? And that's why traders generally bounce from strategy to strategy, because they're not sure what works. And you know what? Why they don't last too long? Because they're changing strategy to strategy to strategy on all these different weird forums. What they end up is they end up running out of capital. But this system will ensure you do have longevity and you can try different things. Funnily enough, if you go through the whole Pro Trader course, it will give you that much structure and profile. You'll already be making money. So you'll be automatically getting rid of all those poisonous, toxic things that you may have learned online just through Google. And I think you'll really enjoy this. So let me just turn over to the slideshow and we'll get you started. Okay, so what's your biggest fear with trading? Well, I know what it is. It's actually the fear of losing your cash, right? Now, this is the number one reason why you need a capital management system. Now, going back to the bankers, they have limits, okay, because the management fears they'll lose all their cash. But you yourself, you have access to your money, so you need this structure and profile, right, to give you longevity as a trader and protect your money whilst you are trading through these markets. Now, professional capital management, think of it this way. It's planting the seed for your overall trading career. If you want huge profits, you know, in 3 months, 6 months, in a year's time, that are going to allow you to change your lifestyle, well, you need to get this capital management system under check, grow it, develop it, stick to it, and that's where the cash is. Going for the big winning trades straight up is the problem for most traders. But understand, it's not about like constraining risk. It's just about controlling it, right? You take out the risk, you take out the cash. Understand that profile. No capital management, well, you're going to be a sitting duck, because once the market turns against you, you could potentially lose all your money in one hit. So a capital management system, though, doesn't stop you having losses. What it does is it's about effective risk management. It's about having shallow drawdowns and very quick draw ups. That's the whole profile. As you can see on this chart here, the blue line, effective risk management. Someone who didn't have any capital management, well, that's the red line. And you can see it's completely opposite. You have massive drawdowns because you can't control your risk around certain events, and that's where you have massive drawdowns. And they're the things that you have problems with getting out of. All right, so come back to our capital management system. Okay, it's about managing your actual cash, obviously, but there's another couple of components: your risk reward ratio and also your trade plan. 3 different parts to your trade profile that you need to stick to. Risk reward ratio, what are we talking about there? Well, on the general face of it, when you look at a trade setup, it should have a 3-to-1 risk reward profile, right? If it does, well, then you've probably got a good trade setup. If it doesn't, and it doesn't look like there's 3-to-1 in it, well, then, you know what, maybe it's the wrong trade. So it's a good way to stop you getting into bad trades and a good way to get you or confirm that this trade has got good potential. Your trading plan, well, that's pretty simple. Your entry and your exits, okay? This has to be done before you put the trade on. Otherwise, you know, if you don't have a set plan before you put the trade on, well, things are just going to change. Having a set profile and a set trade plan with your entries and your exits is critical. Managing the drawdowns, okay, back to the cash. This is all about managing your cash so you don't run out of money before the good times come, right? It's pretty simple. And the structure of the capital management system, right, it's up the elevator, right? You're making quick capital, and when you lose cash, it's down the stairs, nice and slow. Step it down as you go. Now, let me just run you through the 4 consecutive loss rule. Okay, this is the whole profile that I set up in 2009. Okay, you've got draw up levels, and when you hit these draw up levels, you won't go back. If you stick to the 4 consecutive loss rule, I should say, you won't go back down below your previous level. And that's what the great thing about this whole system is. Now, let's have a look at the 4 consecutive loss rule. You start with your trading capital. You have 1, 2, 3, 4 losing trades. Okay, you just decrease your trade size in half. It's simple. How hard? It's not. So I say, how hard can it be? This is not hard at all to understand. Once you get back to your original trading capital, okay, you go back to your original trade size, right? Very simple, very methodical. You have to be disciplined to stick to it though. Let me just explain to you how it works. Now let's just look at the overall parameters around the 4 consecutive loss rule. Okay, you've got a risk reward ratio of 3 to 1. Now that's automatically encapsulated or captured, I should say, in our trade plan. You've got your entry, you take profit of 75 points and your stop loss of 25. Now the ADR, that's short for average daily range. When the majors kick in a gear, if there's something happens, they generally run up like 150 points, right? So that 75 points is well within the high and low. It makes sure that trade gets executed and you're building capital. Now, of course, you can widen out the stop loss. If you widen out the stop loss, you've got to widen out the take profit. Now, the danger is you get closer to, say, a 50-point stop loss, your take profit will be 150 points. And for you to take profit on those trades is getting it a little bit sticky. All right. So by all means, 30, maybe 35 points stop loss, but don't go beyond that. Otherwise, generally, you've already got the wrong trade anyway, and the market's moving against you. So the minimum amount of risk you need to put on is 25. Now, the capital at risk, 2.5%. The capital you gain or make on a full profitable trade is 7.5%. And with this profile, of course, your objective is well above 100% return. All right, so let's just go with an example here of $10,000. Okay, we're risking, well, the trade plan, once again, 25 and 75. Okay, 2.5% of our capital is $250, right? So a 25-point move gives us a trade size. So you're working at your trade size backwards. So a $10,000 starting point, our full trade size is 100K. And that gives us a $250 loss and a $750 profit. Now, let me just go through the drawdown process and show you how this works. So if you have 4 losses in a row, right, you're down at $9,000, you're down $1,000, you decrease your trade size in half straight away. You get to drawdown level 2, okay, decrease your trade size again, 25K. You're now incrementally reducing your trade size very quickly. You get to drawdown level 3, you're at $10,000, and you don't go below that trade size, otherwise you'll never make your way back out. Right, now I'm giving you a very good example here of where you've got 20 losing trades in a row, which is a hell of a run, I've got to say, but you're still down less than $2,000 or less than 20% of your starting capital. Now, if you didn't have this capital management profile, you'd probably be close to zero. And that's the beauty of this. Now, let me go through the draw up process, and then I'll run you through other scenarios. The draw up levels, okay, think of these as specific goals for your trading. You need to stick to them. They are the guidelines of your business profile. I was just going to say your trade plan there, but your business plan overall. Each goal is very important. Focus on the next one above, not the 1, 4, or 5 goals in front. Each one is your next goal, and that keeps you on track. Now, the good thing about these specific draw up levels, when you hit them, you can double your trade size and be confident knowing that you're not going to go back down below your previous starting point. And that's for all of these levels. So draw up level 1, you make $5,000, you're at 15 grand, right? You double your trade size to 200K, you're now making $1,500 per trade, right? And that's a good thing, right? So you want to make money. So you get to draw up level 2, you're at $25,000, you double your trade size to 400K, and if you stick to the 4 consecutive loss rule, you will never go back below $15,000. Once again, you're confident, you're already trading with money you've already made. Then the next level, 40,000, draw up level 4, 75,000, draw up level 5, 140,000, draw up level 6, 270,000. Now, the WTR, okay, that's the winning trades required. How many winning trades you need, right? And don't forget, they're full winning trades of 75 points. And you're not going to get those all the time. But for this model, it's best to show you the full maximum profile, right? So as you can see on the far right-hand side, you've got the leverage. So as you go through that, okay, you can see from the starting point, you're only trading 10 to 1. Right? So that covers trades in every jurisdiction, okay? Minimum 25 to 1 for Japanese and Singapore traders. This fits the whole profile the whole way up, right? That's the idea of showing you the leverage. And you can see how the trade size doubles as you get more successful. And you don't need a lot of winning trades to get there. The drawdown process. Now, let me just go through this a little bit in more detail. Okay, it's a parachute. As I said, it's like going down the stairs. It's to slow you down on the way down. It's not like a quick lead balloon. Now, let me just go through the drawdown process, okay, in detail. You're at $10,000. You have your first loss. You're at $9,750. You have a second loss. You're at $9,500. Your third loss, you're at $9,250. You have your fourth loss in a row. You'd probably be a little bit demoralized. You're at drawdown level 1. You've got to decrease your trade size in half. And then you can see your trade, when you're losing less, it's less of an impact. So as you continue, and so for example, we go through and have another 4 losses, okay, you're only losing $500. So that sort of keeps you in the game. And I'd say if you've had this profile, you're either over trading yourself, or you're trading when the market conditions are not suitable. But that's the whole profile. But let me just show you the draw up process, because you won't appreciate the drawdown process until you've had a bit of a drawdown process. So say we're at 8875, you're at $50,000. You have a winning trade, you're at 9250. Another winning trade, you're at 9625. Another winning trade, and you're back at $10,000, and you increase your trade size back to normal. So I just want to show you the way down and then the way back out. It's very methodical. And so what you should be doing is, when you're looking at this, you're thinking, okay, you really need to take your time with trade selection, because this is very important to your overall success and your capital management structure. Now, the draw up process, it's very methodical, very structured, and this is going to keep you on track. So once again, starting with $10,000 capital. Okay, you have one winning trade, you're at $10,750, and as you continue to have winning trades, your capital just slowly builds. Now, this may be a little bit frustrating at first, but it won't be once you start to hit the draw up levels, and that's when you start to really make serious gains. Okay, so 6.6 winning trades, you're at draw up level 1, $15,000. Okay, I know it says 7 there, but you actually don't need a full winning trade to get to that $15,000. And now you're starting to make some serious cash. You're making $1,500 a trade. But let me just show you the drawdown process, because the 4 consecutive loss rule is active the entire time you're trading, regardless if you're a drawdown or draw up. If you're at 13,750, okay, you have 4 losing trades, you lose $1,000, you're at 12,750. You're drawing down very quickly. You don't wait till you hit $10,000. You start in capital. Right? That's the luxury of this program. The drawdown level 2, 12,250. Drawdown level 3, 12,000. Drawdown level 4, 11,900. Okay, you're still almost $2,000, right? 20% up, and you've actually just had 16 losing trades in a row, which is sort of almost unthinkable, right? But that's the good thing about this. If you stick to the structure, as you make money, you'll never keep going back down below your previous levels. So let's just look at the draw up process from that 12,000. Now you have to wait until you hit the previous draw up level. So drawdown level 2 was at 12,250. Okay, you get to 12,250 after 4 winning trades. You're increasing your trade size back to that original starting point again, 25K. And then you continue on until you hit the next level, 12,750. You're back at 50,000, and away you go. Now that gives you absolute protection. But we can take this a step further, and that's by, as you make money, you can start pulling some of that capital out of your account. There's no need to sit it all there in the account, right? Most of the brokers do give you greater leverage than what you're actually trading. And this is how we can take advantage of it. Now, we worked this out over a number of years just from our clients. We found most people were having trouble when they got to draw up level 3. And that's because they had too much cash in their account, and they got a little bit lazy, a little bit sloppy with their capital management, a little bit sloppy with their trade selection. So what the idea is, we want you to start taking cash out as you start making money. Now, the easiest way to work this out is, so from the start of draw up level 1, it's just the difference between these levels, all the draw up levels. So 5,000 after you hit draw up level 1, 10,000 after draw up level 2, 15,000 at draw up level 3, 35,000 at draw up level 4, 65 at draw up 5, 130,000 at draw up level 6. Now, the idea is, if you've got 40,000 in your account, okay, I'll say 15,000, you'll make different trading decisions than if you had 40. right? We still increase our trade size and stick to the 4 consecutive loss rule, but you'll be more specific and more targeted if you stick with just 15,000 in your account instead of just 40, right? And as you can see with the leverage here, okay, 40 to 1, we're sort of hitting our straps here on the initial outset. But as we go up through the process, you can see how the profile sort of sticks around that 40 to 50%, 50 to 1, sorry. And that works for most of the locations. So when you are, and I've got over here capital required for Japan and Singapore, USA and other, you can actually sort of see how much capital you need to stick in the accounts or keep in the accounts. Unfortunately for traders in Japan and Singapore, once you get up to, say, Drawup level 6, instead of keeping $130,000 in your account, if you want to keep managing this whole profile, you're going to have to keep $256K in your account. But for everyone else, okay, you can have that minimum balance in your account. And once again, it allows you to, reap the rewards of your trading, as well as reduce your risk with the trading platforms. So the idea is once you start having draw ups, leave the minimum amount in the account. The rewarding process is hugely important. Don't underestimate it. Start taking some cash out and spending it. That's how you will really appreciate what you're doing, and that keeps you on track. And it's about refocusing you to make more money. The biggest problem, as I said, as you get into the draw up process, it's actually you will lose your ability to think clearly, put it that way. You will think you know more things about everything than you ever have, and you'll start to trade very big and you'll have some losses, some major losses. So stick to it. There's one clear way to do this, and it's actually focusing on the number of trades that you need to go from one draw up level to the next. Okay, so you know here the minimum balance you need to keep in your account as we go along. It's the difference between the levels. That's easy to understand. Those red numbers, they're the number of winning trades required to go from one level to the next. That's what I want you to focus on. Don't think of the cash amounts. Think of the number of winning trades, right? It's a good way to really keep focused. And let me give you an example. So how to recalculate. Because in the real market, right, you're not going to make 75 points on every trade. You may make 25. You may make 40. And say for this instance, you make 40 points. And you lock in $400. So quickly recalculate. Because it's not 75 points, you need to do a quick recalculation. You got your 5,000 minus 400. You need to make $4,600 to get to that next draw up level. How many trades required is that? Well, it's 4,600 minus our maximum profit. You need 6.13 winning trades. Now, this is a good way to stay focused, as I said. Trade 2, you make 57 points, $570. Recalculate, 4,600 minus 570. You need to make 4,030. How many winning trades is that? Well, 5.37, right? And this is a good way to keep you on track. In actual fact, I would suggest you buy some Post-it notes and write that number down. So every time you come back to the computer, you're not thinking of the cash, you're thinking of the number of winning trades you need. It's a great way to keep you on track. Now, let me just bring this into reality, and this brings it back towards where the bankers are, okay, and how they manage their limits. Okay, capital management meets the fundamentals, or you could actually say meets reality. Okay, not every trading situation is the same. So what we want to do is give you the flexibility to adjust your trade size on the opportunity, but still stick to the same drawdown levels, right? The levels are still there, but you have the structure and the flexibility to adjust your capital from, say, just a rigid trade size to adjusting it on the opportunity itself. So instead of having 100,000, you might have 25,000, right? But if you do hit the drawdown levels, decrease your maximum trade size in half. But if you get back to the starting capital, you're back to your original trade size. Same structure, different underbelly, right? Now, let me explain this to you. So maximum trade size, still 2.5% of your capital at risk. So this is where, you really need to focus on your understanding of the market, specific trades, entry levels, and the trading opportunities. So focusing on the job at hand, right? Very important, because not all trading opportunities are equal. Okay, you've got all these economic data releases that are high impacting, and they're high impacting because they can change momentum very quickly. If we've already got momentum and they come out and they go with that momentum, well, then you're going to have a really good, strong, structured trade. Okay, so what you need to do is have a look at your capital management structure. If you've had no losses, well, then you could potentially trade 1, 2, 3, or 4 trades on this one opportunity. You need to assess how good an opportunity it is. If you've already had some losses, well, then there's no chance of you maximizing with, say, 4 trades if you've had 2 losses already. So make sure you understand this. It's very important. And a lot of people bend the rules here. So let me just give you an example. So say you're at 15,000 bucks, you're trading 200K, you need 6.6 winning trades to get to Drawup level 2. But we've got a CPI release, right? High impacting, perfect. You've had no recent losing trades. You've got 4 trades available. So you decided to place the 4 trades on the opportunity, 800K instead of your 200. Now, there's 2 scenarios here. You've got to have this in your head before you actually trade, right? If you get a winning trade, right, you've reduced the overall number of trades to get up to Drawup level 2 by 4. You've had 4 winning trades in one hit. But your next trade size is 200K. If you've had a losing trade, that's like having 4 losing trades in a row, maximum trade size. You're now in a drawdown phase and you've got to do it, right? It's your medicine, right? And it ensures your trading career. So make sure you stick to it. One of the biggest problems we've seen is traders actually have the 4 winning trades, right? Then they keep maximizing their trade size on every opportunity. And that's a real no. You'll blow up very quickly. So if you're down 2 or 3 trades, don't chase the market. Wait for a directional, high-impacting trade to put you back in the game, right? The draw-up process is methodical. Stick to it. So here's a little bit of a structure of your trading, how your trading should go around the events. So trading opportunity number 1, you've got a technical setup only, right? With that, maybe just half the trade size. Trading opportunity number 2, say it's just a fundamental release, no technicals. So once again, maybe just half the trade size on that event. Trade size number 3, we've got a geopolitical issue sort of going in the background. There's a bit of direction, but we know that can change quickly. So once again, let's trade, but only half the trade size. Then the 4th opportunity coming up, we've got technicals and fundamentals all lining up, all pointing in one way. Well, then there's a maximum trade size. And this gives you a bit of an idea of how your trading adjusts with market activity. Then the next trade after that, you've had a winning trade, technical trade number 5, you get the technical setup only. Well, then you're quickly reducing your trade size to half, not going in guns blazing again, just because you've had a win. It's around the opportunity. If you stick to this, you'll have strong capital growth and you've got complete flexibility with your trade size, right? Now, the hardest thing for new traders is getting this profile going because you want to make money quickly and then do it. But you know, you got to take the baby steps as you just get it done. Let's just look at the dynamic drawdown here of your whole system. And you can see as you go through this, right, the 4 consecutive loss rule, you have 4 losses at 100,000, you're reducing your trade size. But this way, you can have 8 trades like I've got it here in front of us where I've changed the trade size around the events, okay? You could even go 25K initially, and wait for those key events and hit them harder. But I just want to show you that you can have potentially 8 losing trades in a row, right? Now, the draw-up process, why is this more beneficial? A dynamic capital management system. So say you're at 9,250, right? And you see a really good trading opportunity. Well, you do 1 trade, you're back at your starting capital straight away. And you see another good trading opportunity after that, and they usually come in runs. You're at 10,750, you have 4 winning trades, you're at 11,500, okay, after having 5 losing trades in a row. You're almost up 15%, and you've had these 5 losing trades. So dynamic capital management gives you greater flexibility and allows you to come out of a losing situation very quickly. How do we do it? Now, this is where the rest of the webinars on how the bankers trade Forex is going to come into place. It's about isolating the best trading opportunities. Okay, what are they? Low risk, high probability, where everything's working in your favor and the market's working with you. So on these low risk, high probability opportunities, you definitely load up, right? Key fundamental release, you got the technicals as well. That's when you start to think about maximum trade size, okay? It's going to be awesome. It's going to transform your results and the effect will be immediate. You'll go from sort of chopping and changing strategies to being more consistent with your strategies, just changing your capital profile. And when the good ones come up, you'll have much bigger draw ups, that's for sure. and you'll lead to more consistent capital growth. It doesn't mean you don't lose money, because we'll always have losing trades. But when you win, you'll maximize the opportunities even more. Okay, so that's pretty much a bit of a wrap of the capital management system, the 4 consecutive loss rule, the dynamic drawdown, how it fits in with the bankers. Okay, don't forget, they don't have this massive structure. They have limits, and they work with those limits. That's their profile. That's their capital management structure. If they don't stick to it, it's their career. For you, it's your cash. So make sure you spend a bit of time going through this. If you have any questions, drop us a line at info@tradersfortraders.com, or give me a call or jump on the website in the 247 trade zone. Now, this sets us up nicely for next week, okay, where we come back and start to look at the fundamentals, isolating those good trading opportunities, looking at the relationship with the economic numbers, the different financial markets, where your technicals and everything comes into play, right? This is the main game, and that's what you need to concentrate on, right? This is where it gets exciting. All right, so I hope that made sense to you guys. This capital management system, it's no joke. It is going to give you structure. You stick discipline to this, and I can guarantee that you will be trading for a very long time. And as you get traded with more experience, you learn more. Your trading decisions get better. So this is what you need to get through into your structure of your trading, and it's going to give you the growth and the foundations for a great trading career. As I said, don't forget, give me a shout if you don't understand it, or jump on the site, try out the free trial. We're here to help. We look forward to working with you. Cheerio.